Good morning, everybody. Welcome to today's 1Million by 1Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of the mission, we do these free mentoring roundtables week after week after week. This is the 505th session. In September, we celebrated a milestone of 500 roundtables. Every single recording is available on our YouTube channel. You can access all of them. It's good learning material if you're looking for something to learn from. And on Twitter, we're at 1M by 1M and at Stromana. We publish a lot of interesting content. Today, the hashtag for the event is hashtag 1M1M. We are going to start today's session with a conversation with Elizabeth Yin, General Partner at Hustle Fund. Elizabeth, welcome to the show.
Thank you. Thanks for having me, Sharmana.
My pleasure. Let's get you acquainted with our audience. Tell us a bit about your background.
Yeah, so in a nutshell, grew up in Silicon Valley and worked at big tech for a while. In fact, my last large tech job, I think, was at Google, and I felt like, although it was great, it was just way too big for me. So I decided to start my own business in late 2008. So I really have wonderful timing. I left my cushy job to start my own company, but I couldn't raise any money at all. And as you know, many of you may remember, those were hard times, but it really taught me how to build a business. Ended up building out an ad network called LaunchBit and sold that company in 2014, and I've been on the investing side for the last 6 years or so, most recently with Hustle Fund.
All right. So you just talked about your being for several years in big tech, the last job being Google, and then you started a company right as the financial crisis was kicking in gear, and then you built an ad network and sold it in 2014, and how you've been in investment since. I was about to ask you about the investment thesis of Hustle Fund.
Yes, that's right. So for Hustle Funds, we call ourselves a pre-seed fund, which means that we invest in software startups at the earliest stages. I know everyone says they're an early stage investor, but what we mean by it is our sweet spot is we look for companies with a product, but we don't care about traction at all. And we can make that decision usually within 48 hours of a conversation with a founder, and can certainly dig into the model, but that's the gist of it.
Okay. Well, we will dig into the model. Let me get a bit of the specifics of what check size are you writing usually?
Yeah, our first check in almost all cases is $25,000.
And how big is the fund?
Our fund one was an $11.5 million fund, and our fund two is announced.
Okay. And what do you look for by way of validation? I mean, anybody can put together a product. What is it that you're looking for? What sector, what kind of business model, B2B, B2C, what types of problems do you want to solve? And, you know, what specifically determines what you like to write your check for?
Certainly. So there are a couple of considerations. Number one is, I think, your fund size is your strategy. Everyone says that, but what does that really mean? I think for smaller funds, there are certain things you can do and certain things you can't do. So, for example, when you're writing a smaller check to kind of mitigate downside risk, for us, we look for companies that could potentially, you know, generate revenue almost immediately. So even if we are coming in super early and the company cannot raise any more money, they ought to be able to survive and thrive even without additional VC funding. And so as such, we tend to invest mostly in B2B, some fintech. We've done some consumer digital health as well, where you could get paid fairly quickly with a D2C type of model. But the second thing is also around, you know, what, like people often ask me what sectors I like, and actually it's not about sector at all, but rather since I've been an entrepreneur for a long time and I've done a lot of marketing myself, I think the biggest problem today is actually customer acquisition. It's generally not technology for most businesses.
You're saying that you focus really on customer acquisition more than technology. What you're really worried about is how quickly a company can get into revenue and what is the customer acquisition strategy that gets into revenue. Can you elaborate on that? What are some nuggets you're learning from the market of effective customer acquisition strategies?
Well, there are customer acquisition channels that are very competitive already.
Yes.
Every customer acquisition channel has a cost. I think a lot of people think that, SEO or something might be free, but there's a cost to hiring people to write, to build links, to partner. And so, when I look at an idea, basically on gut feeling, try to think, well, I actually think, this spread might be too tight between what I would perceive to be the CAC at scale and what I think the value of the customer is. And that's essentially how I make my decisions.
Yeah. Okay. Let's talk about some of the companies that you've invested in and specifically talk about what did you see in them, especially by way of customer acquisition strategy. What were they doing that got them an effective customer acquisition strategy, since that's your primary determining factor? Let's do a few case studies.
Certainly. So because we have a wide swath of companies, the customer acquisition methods will range a bit, but I think on one end of the range, if we go with a more consumer company, I have a number of consumer digital health companies in my portfolio, and almost all of them have actually very similar playbook, primarily Facebook ads, but other forms of, ads as well. And essentially the model there is just really test out a lot of Facebook campaigns for these D2C products. It could be telehealth. It could be, medications. My most notable company in this category, or rather the one that's furthest along probably is called the Pill Club. They, certainly can't say what their current valuation and revenue is, but, they are truly what a VC looks for in fast growth, $100 million a year by year 5 type of thing. And so they, the playbook is just bid up ads, watch your spend, watch your payback period. Don't let it slip. Ideally get, payback on first month. And it is actually very doable to do that for many of these digital health companies. Mm-hmm. And then if you can provide a good experience and get the retention, then, obviously additional value from the customers over the next several months really helps you out a lot. So that's one strategy that a number of companies use. On the other end, we've done a lot in B2B SaaS. We tend not to do enterprise, where it's such a long sales cycle, because $25K doesn't really last you that long. And so for those folks, obviously there are variations on it, but a lot of them initially do outbound or some variation of outbound cold emailing. A good cold email can go a long ways. I think the other thing is these days you can make a sale relatively quickly. I think in the old days people thought, cold email is something that you can only do if customers were, tens of thousands of dollars to you or more. And I think the reality is actually that value of that customer doesn't need to be that high in order for cold email and a quick demo to work, if you can get the close fast enough. And so on that side, I think actually most of my companies are a lot newer, and so I don't have any companies that anyone would have heard of in that category. But certainly companies on the B2B SaaS side span the gamut for us: construction, pseudo fintech / B2B. Just they're actually kind of literally all over the place.
And these are all selling to small businesses, so it's online customer acquisition.
In some cases, the play for B2B is that lead gen to a webinar and getting online businesses to sign up for a Zoom webinar and then, make the sale in the webinar. And then also, to your point, actually selling to startups, even if they're Series B or Series C startups, is often a faster sales cycle than selling to companies that have been around for a long time. So that also has helped out, I think, the B2B sector overall.
Mm-hmm. And so when you're writing a 25K check for these kinds of companies, is that a convertible note or is that an equity investment? What terms do you apply?
If we are the first ones to the table, we will do that on a safe. And if we are not the first ones to the table and there's a round that's already there in place, we will look at it for the terms at hand. So sometimes it's an equity round, sometimes a convertible note, and sometimes a safe. Okay.
All right. And from your fund strategy point of view, are you looking for venture-style companies, as you said, the 0 to 100 million in 5 years kind of companies, or are you looking for early exits? A lot of small funds are now looking at early exits, including in some cases, they're selling to later round investors, their positions. What is your analysis of your fund strategy?
We're looking for 100x return as the ideal in our winners. Obviously, that's not something anybody can guarantee, and something that doesn't happen frequently. But what I mean by that is, let's say that we're getting in at call it $3 million post money. We are looking for an exit of at least $300 million, and so as such, depending on when you get in, the exit doesn't have to necessarily be a unicorn, $1 billion business, but obviously, if that valuation is higher and our entry point, then, the stakes are higher as well. The other thing is, in about 20% of cases in our model, so actually to lay out the whole model, we are a relatively high-frequency investment shop in that we invest in, about 100 to 200 companies per fund. And so as such, we are doing a lot of investing. In about 20% of cases, we will follow on, and usually at around seed or so. And we decide who to follow on based on a number of factors, including working with the founders. Is it a good fit on both sides, actually, to continue working? And that is actually how we decide where to allocate most of our capital. And if on that second check, we can also get in and believe that we can have potentially 100x at that valuation, then we will do that. So that is also a factor in our follow-on. But we are looking for that because I think in having run the numbers, number one, the failure rate is so high. And when I say that, a lot of people are like, well, my companies are always doing well. But it's not failure rate of the companies, it's failure rate for the investors. I've been in a number of scenarios over the years where the company actually has done quite well, but there's no opportunity for investors to sell or get their money out. So that is considered a failure. And as such, the winners then need to basically pay for all the failures and then plus a lot more in order to generate a great fund. I think the second thing is if you do have companies that are, have found product market fit and are really growing quickly, it is a lot easier to continue growing that than to start a new business. And so as such, we don't like to sell early.
Okay. So, and what is the total, if in these 25% of the companies where you do a follow-on, how much money do you invest? What do you allocate per company in that preferred bucket?
We will follow on with anywhere between 250K to even up to $1 million in our follow-on investments.
Okay, got it. What happens to these, let's say of 100 companies from your first fund, if 25 gets follow-on and the other 75 doesn't? What happens to those other 75?
They continue on just like everybody else. We help all of our companies, regardless of how much we're investing, raise money from investors, whether it's when we write the first check or, you know, at their seed round, whether we're writing another check or not. You know, I think that the natural question in people's minds is, well, if you don't follow on, does that mean it's a bad company? And actually the answer is no. In fact, if we look at the companies we didn't follow on, in fact, in some cases, they may be a phenomenal company and it's the valuation, you know, I guess you could say got away from us and we didn't believe we could have 100x. So that's certainly one reason why we might not invest again, because we felt like the valuation was too high relative to where they were. And that could just be because we were preempted by, you know, some large fund or whatnot. In other cases, it could be that actually we may want to follow on, but just not right now. And there isn't any distinct point in time anymore where you would follow on. I think one, you know, big change in the ecosystem is a lot of people are investing on convertible notes and SAFE. And so actually when we do follow on, it's usually off round, not when other investors are investing. So we may not do the seed, but we may do the post-seed and just offer it as a direct check. Or we may do it even before the seed. And so, you know, just because we haven't followed on means that it does not mean that we will not. And then I think the last consideration around that is just, you know, I think the learnings about the market and the growth, it could be that the company is actually growing quite well and will be a successful exit from a founder's perspective, but it may not hit kind of the I guess, requirements or whatever that we think it needs to in order for us to return the fund. And that is not a bad thing, actually. The company could be, you know, quite brilliant.
So your follow-ons are also on SAFE, or are those equity investments?
Typically, they are on SAFE.
Oh, okay. So your entire fund is SAFE. Interesting. Got it. Can you talked about digital health being one category. You talked about B2B being one category. Is there a breakout company in your fund that has done really well that you could talk about in a bit more detail?
Certainly. So we have only been around for just over 3 years now. So most of the companies we've invested in the last, you know, 2 years or so, nobody would have heard of. But what we did was we actually rolled in our angel investments into the fund. So they are actually Hustle Fund portfolio companies. So, you know, we have companies like, for example, we invested in, I don't know what the nomenclature is, but seed or pre-seed in Webflow many years ago, I think in 2012. We are investors at the seed in NerdWallet. That's a financial advice company. Both of those are doing incredibly well, even if their valuations are not announced. They are, you know, sort of in that unicorn status or whatever you would want to call it. And the Pill Club as well, I think for those who follow digital health, is, you know, it's also up there. So those are probably the most well-known in our portfolio. The other companies are quite new, but I'm actually very excited about the trajectory of many of them.
So if you look at what you are looking for now, based on your observation in about the market, what's happening, the trends, COVID, you know, extreme amounts of online spending, online time spending, etc., what have you concluded as to what you would like to invest in? What's your current investment thesis based on trends?
I think it's so funny because it's, you know, this entire year has been so challenging to predict. So for us, we just sort of stay the course of, you know, based on current frameworks, like what we think. Again, we'll have relatively straightforward customer acquisition, but of course, even that is hard to predict. In fact, I would say that a lot of my companies that have been using Facebook ads, they've actually seen a benefit in some sense from COVID, in that the customer acquisition costs have gone down fairly tremendously because a lot of companies have just stopped advertising altogether in response to COVID and the potential uncertainty. So I think that would have been very challenging to predict. I don't know which way it would have gone, especially in light of the fact that actually digital health has, you know, really boomed, and so has remote work during this time. And digital health in particular uses those channels. In you know, a couple of cases, I have two health companies that have been able to expand their market because regulations have also decreased during this time. You can now serve other states more easily without having to jump through the normal hoops. And that's definitely not something I would have predicted. Whether that lasts or not, I don't know, unfortunately. Like next year, I don't know if the government will say, okay, well, actually, you have to jump back in the queue and go through our regular regulatory approvals state by state. But it certainly has been interesting to watch.
Interesting. I think that's a good summary of what you are trying to do. As you can imagine, our portfolio constantly sees companies in your stage, and we will, now that we know about what your agenda is, we will make those connections as we go along. Thank you for coming today.
Thank you for having me.
I know you have to run. See you soon. Bye-bye.
Thank you. Take care.
Marko Lauhiala, you are going to be our first presenter. Let me put together a little bit of a expectation setting for those of you who will present today or in an upcoming session. This is a safe working session. We have no other agenda besides helping you figure out how to address your challenges. So do not be nervous, do not be defensive. This is a conversation. This is not, there's nothing aggressive or, threatening about this. If you disagree with the feedback you get today, that's fine too. You can ignore my feedback. You can consider the feedback. Whatever it is your company, you will decide what to do. So typically we give you feedback based on experience, so you may want to take that somewhat seriously, at least to strategize with. All right, Marko, let's get started. Marko from Finland.
Yes, hello. Hello, Sarma, and hello, everybody. My name is Marko. Thank you for having me. Yes, I'm indeed from Finland. It's getting cold over here, so that's my greetings for you. So, my business is, our business is called Relefant, and we aim to simplify business information flow. So we work with companies. And it all started from a common place where if anybody has ever worked in a large organization, we'll find out that we'll know that there are lots of problems finding information in large organizations due to different data silos, multiple applications and systems, and it just because of the history of the organization, there may be broken links to information and data, and this creates a lot of broken and complex information flows. And the ones that suffer from this are the actual organization, but also the employees suffer from this daily struggle finding information that they may need to do their jobs properly. This ends up just escalating and causing things like misplaced data, documents, suboptimized and misaligned resources, projects, and delays in not only internal projects, but also maybe even customer projects. And this is costing companies millions every year. Next slide, please. And the actual cost of the problem, I just took 3 countries here as an example, but where the cost of the problem comes from is that employees are spending about 20 to 35% of their day searching for internal information. This is data gathered from sources like IDC, Google even. Gartner has done studies on this, and multiple tech companies have done the same kind of studies, which is a lot of time wasted searching for information. But not only that, there are about every single employee in a larger enterprise is dealing with more than 30 applications and systems on a daily basis, which actually leads to hundreds and hundreds of switches between different applications. And we know for a fact that over 50% in take any country in the business sector, employees are working with data on a daily basis. So adding all these together, it creates a gigantic problem that adds to billions in various countries. And I just took 3 examples here of companies of over 100 employees or 250 employees. And we're seeing that it's in the billions that companies are wasting at a national level. So how we solve this, we work with data, not only data integration, but we also interconnect data, and we enrich it, and we simplify it so it's easily accessible by any employee in the organization. So we kind of democratize information, and regardless of who the employee is, they should be able to access information and work with information, because it is something that every employee is working with nowadays. So our approach is to interconnect using graph technology, specifically knowledge graphs, to bring in context and enrich this information. And the result is, of course, improvement in not only efficiency, but also productivity and various outputs of employees. So our proposal is that we can improve the information flow in organizations by at least 15%. We can go further with this calculation, but at least 15%. And the results are directly result in cost savings from employees not wasting time, having easy access to information, but also it has effects on the transparency and the governance of the organization. And based on calculations, it has a direct positive impact on revenue as well. The more productive the employees are, the more output they will have, and that will have a direct input in revenue. So our product, our solution is the way that we unify different data silos, data systems, applications, sources, whether they're human resources or CRMs or ERPs or content or document management systems, it doesn't matter. We use knowledge graph technology to unify these and improve the quality of the data, and then we push it and we simplify it. So we end up with this very simple, very easy visual application that any employee can use. And this application front end updates dynamically. So everything that is visible is connected to anything, to everything in the organization. So employees can navigate very easily from one point to another. Our focus is on customers of mid to large scale, so enterprise scale customers, and we are focusing on manufacturing, logistics specifically, and construction as well. These tend to have lots of data, lots of data points and data sources, and they may not always have the best systems to deal with the entire information flow from end to end. We are reaching out these customers right now. We are in early stages, but we are reaching out by specifically direct customer contacting. Our business model is just enterprise business to business SaaS. We do foresee a demand in professional services due to the nature of the solution that we're delivering. It does require data mapping, information mapping, and taking the customer through the actual journey and all the way up to the training of how to use this new system. Next slide, please. So our status is currently, as we started this in 2018 already. We had a major team rebuild due to the nature of being bootstrapped, so it's not all fun and games. So some team members join and some team members leave, and then new ones join. So we're currently building the team, and we have 4 fantastic people on board right now, taking us to the next level. We have a full MVP that we finalized this spring, and we're continuously developing that. And we're talking with customers, potential prospects, not only in Europe but also in Canada. Those are our current focus areas. So that's my presentation today.
Marko, when you say you bootstrapped in summer 2018, did you actually have customers?
No. We've been, I funded part of the company myself, and it's been, as I said, some team members came along, and we went with a sweat equity model. So expecting investment and customers if every team member knows and understands that we have to work together to get to the next stage. But that mentality doesn't always translate to every single person that you talk to. They may say that they want to join a startup, and they may say that they want to work for sweat equity, and they may say that they're going to work hard. But when push comes to shove, it's very seldom that I see people that actually are willing to take that step and actually work and put the effort so we can get to the next stage. Most of the people that I've talked to are just expecting a salary. Yes, go ahead, please.
I can give you some feedback. Did you come here with specific questions?
Actually, I didn't. My dear partner, just said that there's this event, and he said that I should attend, and that's the only thing that I had time to do. But obviously, I do understand. I looked at your profile, and I saw that you've worked with large corporations, and I wanted to ask you, based on that, how have you seen personally this problem with finding data, finding information in the larger organizations, and do you see a valid case?
That's not the issue. The issue is you're going into an extremely crowded market. What you are proposing to do, there are numerous people who are proposing to do the same thing. And what I don't see here is a good understanding of the competitive landscape and the ecosystem and so on and so forth. So you need to get a lot more specific if you want to successfully sell, And it's a little bit concerning to me that you've been around since 2018 and we are at the end of 2020 and you haven't yet started selling something. It's very difficult to bootstrap a company without getting to customers very quickly. So here, I'm going to give you a few pointers. We have a very well-honed methodology, which is bootstrapping products using services. I think that is going to be your path to revenue. Whether you have the right product right away or not, you need to start doing services and start generating revenues. Otherwise, this is not a company that is fundable under the current form. So you're going to need to get to revenue as quickly as possible. So if you were to work with us at 1Mby1M, my goal would be to get you to position and follow methodology elements that will get you straight to revenue as quickly as possible. And there are a whole range of stuff that you would need to do that we would have you do that with that objective in mind. So I don't know what you're doing and how you're spending your time right now. I would focus on one specific use case where you can apply your technology and solve a particular use case. You talk about HR, supply chain management, and manufacturing. I think that's very broad. I would go to one use case and maybe even, a set of products that are already inside enterprises within that use case. So if you're talking about HR, there is a set of products that are already inside enterprises in the HR domain. Human capital management is the space, And there are a whole lot of products that are already in that domain, and I would try to understand what are the problems of that particular domain, that particular use case. Are there specific things that people are trying to do and not succeeding in doing? What pain points are they trying to solve? If you go in, this pitch that you just showed me, if you go into a customer with this pitch, I don't think you will be able to sell anything. So you're going to need to go in with with some understanding of what pain point are you solving, and not a generic data pain point. Using data, what specific business use case are you trying to solve, are you able to solve, and where you see that there is a recurring problem. If it's in the domain of human capital management, HR, then you want to know what is something that people are trying to do, but they're not succeeding because of this kind of data problem. So that would be my guidance to you. And I think what will get you to revenue and validation quickly. I think you are too much of a 30,000 level pitch right now. This is not going to crack deals, so to speak.
Okay, thank you for your input.
You're very welcome. I hope it's helpful. All right, folks.
Thank you. Thank you very much. Bye.
You're very welcome. I would like to chat with, just a second, let me open up the, okay, Abe Lederman, who's an alumni of the program and is starting a new company and wants to work with us here, wants to chat. Okay, good. I will get to you, Abe, in just a moment. And then Kashika Arora, you've met me in Thai Kolkata. Oh, great. And you want tips on how can someone want to do business, doesn't have any capital? Well, that's a traditional bootstrapping method. We have a number of bootstrapping methods. We have, this is probably the only program in the world that emphasizes so heavily on bootstrapping. This is the condition of most entrepreneurs around the world, is they're starting without capital. So you are, there are lots of people who are doing that, and that's where bootstrapping kicks in. Let me take a few minutes to take you through the segment where I explain how to use 1 million by 1 million, since Kashika, your question will be answered there. And Abe, I'm going to get to you in right after that, okay? So that's my next segment after that. Folks, if you like what we're doing here, as you saw with Marko, I gave him very kind of precise feedback on what I would do, what my analysis of his situation is, and what I would do to address that situation. So that's the mode in which we work here. We are precise, and we're not trying to please you. We're not trying to give you a pat on the back. We're trying to address issues that will remove roadblocks. Whether it's monetization, whether it's customer acquisition, whatever roadblocks you're facing, that's what I would focus on. Everything resource-wise is at 1Mby1M.com. You will find a very rich blog series that you can read for free. There's also the Entrepreneur Journey case study series on the blog. Kashika, you should go start reading the Entrepreneur Journey blog series. Go to the 1Mby1M.com website, go to blog, go to Entrepreneur Journeys on the left navigation panel, and start reading those. I think it's better that you start getting in the mode of understanding how entrepreneurs think, because, again, 30,000-foot dreams don't translate into success. You have to get into specifics. You have to get into, positioning. You have to get into customer acquisition, and that's how you succeed. Based on that, we also have the Entrepreneur Journeys book series. There are a dozen books. You can start your exploration there as well. These roundtables happen every week. If you start spending time here or listening to the recordings, you will learn a lot as well. Our full acceleration program is 1M by 1M Premium. And that's where you get extensive methodology guidance on a weekly basis. You can study our digital curriculum, that's hundreds of hours, and then couple that with weekly roundtables where we do the methodology guidance, strategy consulting piece. We do have a terrific Rolodex, so yes, you can access our Rolodex by being in the premium program, and that includes potential customers, channel partners, investors, media, analysts, other advisors, everything. Yes, we help you with financing. We have a terrific investor community that works with us, and we will get you in there. I suggest if you have an idea or a project that you're working on, and this applies to you as well, Marko, go to the self-assessment and try to answer this series of questions. These are the granular questions that investors would try to look for answers from you on. And you should try to answer these questions as you try to figure out how you are going to get into that granular strategic planning process. If you get stuck on methodology elements, 1M1M Basic is our curriculum-only program. You can access hundreds of hours of curriculum at your own schedule from anywhere in the world. You're not dependent on anybody just by signing up. You can just get going and move forward. So go dig around on the website, premium, basic, everything is explained in detail, video FAQs, description of the curriculum, so on and so forth. It is a case study-based program. We have thousands of case studies. This includes 100-plus unicorns, 400-plus venture-funded companies, 400-plus bootstrapped companies. Specifically, Kashika, you should read the bootstrapping books. There are 3 or 4 bootstrapping books that you should read, or read the bootstrapping case studies, and you will learn a lot. Our methodology is bootstrap first, raise money later. No one's going to give you money to start a company. People are trying to invest in validated businesses. Whether the business is already in revenue or not, they're looking for validated businesses. So be aware of that, and accordingly, steer your journey. We have free roundtables every week until Thanksgiving, and we also have online rendezvous on LinkedIn Live, Facebook Live, and Twitter Live all the way until Thanksgiving on Tuesday mornings, 8 a.m. Pacific time. So, Abe, if you could dial in, let's figure out what's going on and catch up a bit.
Can you hear me or no?
Yes, I can hear you fine.
Okay. I'm just doing voice over IP on.
Okay. So, Abe, what happened to the previous company? You sold it?
I sold my company in January of this year to a UK-based company.
Congratulations.
I'm sorry?
Congratulations.
Thank you. I've been working with them. It looks like this may be kind of phasing out. And I've been, the last few weeks, I started thinking about what else do I want to do, or what do I want to do next.
Yeah.
And one of the things that's sort of appealing, I've always loved to travel. And actually, I got back on a big trip right at the beginning of March, not knowing that I wasn't going to be traveling anymore for a while. So, and I still, kept remembering your blog article, which listed a bunch of ideas for post-COVID startups, and one that I'm really interested in, which is different. I think it will still leverage my tech skills, but it's not a tech company. We're not going to build a product to sell to enterprises or whatever.
But the travel idea that I wrote, I assume you're talking about the one where we work with enterprises and help them set up kind of like working pods in different places and enable their employee base to travel as well as work remotely, yes? That's the one that
Yeah, that's the one. And I think there are kind of variations on that. And I again, I'm still in sort of in the early stages of, thinking about it, right, at a starting place. And I've been, there's the company called Remote Year, which recently got acquired by a bigger UK company called Selena. And but what I want to figure out if at one level if I can do that much better than they can, but I definitely hear what you're saying, right? At some level, it's basically providing, facilitating, housing in various interesting places around the world, facilitating, people that can kind of be kind of liaisons on the ground. Some of the things that like Remote Year did, it seemed to me a little too much partying focused. And to me also their model, but I need to kind of validate, their model was, you dedicate a whole year and they take you to 12 cities around the world, 1 month each. And that seems a little too rushed to me. So maybe I want to appeal to a little bit maybe older crowd. But I definitely noted what you said, is, go and work with companies, perhaps, like Google or Facebook, and say, okay, we've got this program set up. Would you be willing to sponsor or pay for or whatever part of the cost for, a bunch of your engineers?
Well, I think, the remote work trend is clearly a dominant trend right now, and people are, that opens up a possibility for employees who have full-time jobs to go, live somewhere else for a few months and get to know a different place and still be able to work remotely. That option did not exist, right? For until this remote work trend hit us with such force, employees wouldn't really like that. But today, employees don't mind that. And then the other side of the coin is that, the hotel industry, the hospitality industry has really struggled. So I think, hotels are also starting to think in these. I've seen lots of messaging from various online travel agencies. There's an online travel agency called QE Collection that I use often, and I've seen language from them is that hotels are setting up co-working spaces and working infrastructure and so on and so forth. So I think if you can figure out how to validate this with a bunch of hotels on one end and some companies on the other end, and see if this is something that both parties you're basically setting up an online travel agency. You're sitting in the middle, and it's the online travel agency model, but you're doing it on a B2B basis. You're pairing up employees and hotels, your enterprises and hotels, and you're going to sit in the middle of that. So that's the model that I think is going to be unique and different. It's not at all remote work and helping a bunch of people party in a different country. That's not at all what I have in mind. What I have in mind is an employee benefit program of, and creating an interesting culture, creating an interesting, it's almost human resource development, employees who have the experience of navigating different cultures, different languages tend to be, interesting employees. And I think that this kind of facility would be a draw for young employees or even employees who care about travel and want to raise children with travel as part of their growing up experience. There's a lot of pieces to this that I think is a very interesting offering. I mean, because I also love to travel, if I had this option, if I were working in large companies or companies in general, and if I had this option of, taking advantage of travel while working, a company that offers that would be attractive to me. There's another subtlety that you may want to pay attention to is, as you can see, the airline industry is getting devastated right now as well. And when travel resumes, airline ticket prices are going to go through the roof. They're going to, all analysis that I've read is that airlines are anticipating that business travel is going to go down because the world has figured out how to work remotely, so they're not going to spend as much money in business travel. And in any case, people don't want to travel right now on business. As a result, business travel typically subsidizes the lower ticket prices of consumer travel. If business travel goes away dramatically, then the airlines will have to raise prices on consumer travel. So people will have, difficulty affording that consumer travel. Consumers will have difficulty affording that. So that is going to be another driver. You can't do short trips and be able to amortize the expense. So, however, if there is a longer trip, and especially if the corporations are willing to subsidize that or pay for that, and as a perk, as an employee benefit, that you spend a substantial amount of money, it almost becomes business travel because the company, the enterprise, is paying for the travel, and it's a long period of time. It's not happening. It's not like every week. You're not going for a meeting over a weekend kind of thing. So I think that whole price pressure on airline tickets is another driver of this phenomenon. So I think it's actually quite a unique idea and quite a different kind of thinking than what's been done in the travel industry so far. So I would strongly encourage you to try to validate it with actual hotels and actual enterprises. I would pick, probably if you're validating in the U.S. right now, given what's going on with the pandemic, I would probably work within the U.S. to U.S. travel maybe, just because there are, given the situation, there's a lot of travel restrictions. Like if Americans want to go to Italy, Italy may not want Americans at the moment. There are a lot of people who don't want Americans to come in at the moment. So long term, of course, I think Europe would be very attractive. Asia could be attractive, but I think for the moment, you can start talking to hotels. I don't see why not. You can start talking to hotels. You can start talking to companies from a concept point of view and start validating, and then take it from there.
So do you see an ideal time for how much time somebody would spend in one of these cities? Because does a hotel need to have kitchens kind of in the room, or?
Not necessarily. Not necessarily.
Okay.
Hotel, if it's a bed and breakfast, often they already have a kitchen in the hotel to provide the breakfast. So I think what the hotel will need to provide is, a set of meals, so that, those are the details that you have to work out. I think if somebody wants to travel, they would also want to eat out at restaurants for a certain number of meals. Maybe not every meal, because then that becomes too expensive. But maybe the hotel can create some sort of a package that we provide, this number of meals, and you have a provision for a fixed price and so on and so forth. So those are the details that I think need to be worked out. And the hotel may create, if the rooms are large enough and can be working suites, that's one thing, one option. The other option is the hotel could create a co-working space where the guests could work as well. And this trend is happening. I saw this in Kiwi Collection. If you do some digging, on the internet, I think you will find hotels that are setting up co-working spaces, and that may be the kind of hotels that you start working with, your validation process with. If you make a list of hotels that are setting up co-working spaces and are already moving in this direction, those are the hotels that may be interested in working with you and working with companies to do long-term deals.
Okay. Do you see needing to provide more than connecting a company with a choice of hotels, or what other service do you see needing to provide?
I've actually, if you read the post carefully, I've actually outlined a whole bunch of things that I would want to see. There could be teams that want to go together. So there's all sorts of software-enabled matchmaking that need to be done. There could be different, types of employees based on employee profiles. There could be, groups of people based on ethnicity, or people who want to have a cosmopolitan experience. There's all kinds of different ways that people may want to go in clusters. Maybe if a hotel has 12 rooms and the hotel wants to work with this company as a 12-room package, not just one-offs, but 12 people are being offered by this hotel from the same company to come and work together in this place for a month or 3 months. That could be a possibility. So you have to provide these different types of options, and I think there's a lot of room for creativity. And frankly, I don't buy completely that this is not a technology project. It's actually, you have lots of opportunity to make this interesting by providing these kind of software features with which people can build clusters, build experiences, age group-wise matching of employees, ethnicity matching, all kinds of matchmaking.
But do you see some of the things I could do would be provide, for example, language classes, or provide volunteer opportunities or sightseeing opportunities as part of a package, or to choose from? Maybe.
I think these are the things that you need to figure out. What is it that the customers are looking for? And think about it this way. One, let's take a use case. Let's say there could be a family that wants to go and spend 3 months in some other location and work from home. Work from that location, work remotely. That family has a different set of needs, right? What would that family look for? The family let's say a couple and 2 kids. They need 2 rooms. They need a different set of, that would probably be during the summer when school is not in session. What kind of activities do they want for the kids? Depends on age group, et cetera, et cetera. So I think, you have to take use case by use case. If it's young people who want to do this, no strings attached, then you want to cluster up a bunch of young people and put them in a place. They work, they eat, there's a certain amount of entertainment. That segment has a different need. The families have different needs. So I think you're going to have different use cases and different needs for each of these use cases. So take it use case by use case and think it through. Okay.
What is it going to take to get credibility, right? So, it's easy to identify a number of hotels, pick, 1 or 2 cities, whatever, to start with. And then how do I approach a company? Will I have credibility?
Yeah, you just need to, you put it together, and you put together the hotel side and, and just start talking to HR at some companies and the forward-thinking companies. I see that Facebook, Twitter, they're taking very aggressive stances on remote work. So I think they're also going to be open to creative ideas, and they're full of young people. You know, these are, I think,
will they decide that Facebook that they can do this themselves, or they?
I don't think companies would want to do this themselves. I think you want to provide this. I think they would. This is not core for them. I think HR would want to bring in a service to do this.
Okay.
So I think.
So initially, I don't need much of a website.
You do need a website.
But
and
not.
You should have a website. Otherwise, you're not going to scale anything. You can just start talking to people without a website and start validating, but you don't. You will need to put together a website, and you would need to put together a marketplace, basically an online travel agency like a hotels.com, where people can do the configurations, the searches, the bookings, and everything.
Okay. Somebody connected me with 2 different travel agencies. Do you think that, and with the CEOs of these 2 companies, I haven't talked to these 2 people yet. One, I think, company is called Virtuoso. Do you think that they can be helpful or not? Or you don't know?
You are trying to be an online travel agency. There is no room for another travel agency in this business model.
Okay. All right.
You are going to be the travel agency. I mean, all the hotels.com and TripAdvisor, these are online travel agencies, essentially.
Okay.
OTA is a sector in itself.
Okay. I recently got an email from Airbnb where they're trying to reinvent themselves a bit by facilitating for people to, travel even locally, spend a longer amount of time somewhere, not necessarily too far away, to get a break and talk about getting much discounted rates.
Yep. Airbnb is going to try to do this, I think, as well. Airbnb is going to be a competitor for you.
Okay, so not a partner.
No, I don't think so.
I've struggled.
You're going to have to directly work with the hotels that are forward-thinking. And I would try to do this. If this is an idea that you want to jump on, you should do it fairly quickly and start teeing up the hotels that are thinking along these lines so that you can have a critical mass with which to go start the process.
Okay. No, I like that idea. I bought a domain. I'm not sure that I'm crazy about it, but I don't know if you have any other ideas. The domain I bought is Live and Work Abroad.
Too long.
Okay.
Too long.
Well, it's hard to get.
I would find something really crisp and quick.
Okay. Not easy to do, but all right.
You can do it.
Okay.
Well, great to see you, Abe.
Nice to see you too. Maybe in a few weeks or a month or whatever, maybe I'll do a pitch.
All right. Well, you should. At this point, to do a pitch, you're going to have to come into the premium program, but you know the drill. Go ahead and sign up, and we can start working on it. This is an idea that I'm actually quite passionate about.
All right. I will do that.
About it.
Okay.
All right.
Thank you.
Great.
Bye.
Yeah. Bye-bye. So I am going to take the questions that I see up here in the public chat. Kashika, I've answered your questions, right? I think I've answered all your questions. Go to the Entrepreneur Journey series of books. You're asking for book recommendations and start reading up the bootstrapping books. Shubham Palwal is asking, hi, Tramana, does your program include semiconductor and specifically VLSI-based company? I read that you work with companies working in IT and IT-enabled segments, services segments. I went through your bootstrap course and realized that the model that we followed is similar to what we have followed since inception. Shubham, the way we could work with you is if you are willing to follow a bootstrapping strategy. If you are doing something very capital intensive, that's not going to fit our model, and raising money for semiconductor companies is very difficult. The vast majority of investors don't invest in semiconductors. I personally have a background in semiconductors and EDA, so I understand semiconductors quite well, but those are the constraints of that industry. Does that answer your question? So folks, while you're asking more questions, let me introduce you to Irena Patterson, who will answer questions about the 1M by1M program. You can always talk to her after the program today.
Hi, sir, Ramana. So, Shubham here.
Hi.
So, glad to have attended the roundtable, and really sorry for the background noise. So, are you able to hear me?
Yes, I can hear you fine.
Okay. Yeah. So, just want to highlight that, we understand that semiconductor is a difficult segment to raise money on. And we have felt that over the period of time. Something which I want to highlight is that we followed the bootstrap approach that you have mentioned in your bootstrapping course, which is available on LinkedIn as well as on your site. So like we have always focused on raising the revenue, basically making revenue first and then going to an investor to showcase that this can work.
Shubham, what do you build revenues on in your company that you have bootstrapped? What do you do? Services? Do you do design services? Is that what your service is?
No. Just want to So I'll just briefly go through our journey so far. So we because we are working from India, our headquarters is in India. We primarily started out as services because we knew that nobody will invest in a semiconductor product company, which is very capital intensive, considering the amount of tools required and everything. So we started out with the services, and as soon as the services revenue started coming in, that means
What kind of services?
Right. So the services would include sending contractual employees into the big giants like NVIDIA, Intel, and all those companies. So our employees will go on a contractual basis, and we will get revenue from them. So now that revenue we utilized because all our co-founder team, the entire co-founder team, we had some expertise in USB. So based on the revenue that we obtained from services, we started making a IP prototype, basically something which is related to USB Type-C. So we created an IP which is handles the power delivery through a USB-C port. USB-C port you will find in every gadget these days. So the market is very vast, and with that IP, we sold that IP to multiple customers in the Bay Area itself. So we have three customers in the Bay Area, and we sold IP at a very high price. So we generated revenue. So first we generated revenue from services, and from revenue generated from services, we raised some seed capital. Then from the seed capital and revenue from services, we built an IP. And then we stopped the services segment as we wanted all the employees to focus on the IP side. Then we sold the IP to multiple customers and then raised Series A. So at every point of time, it's like whatever money we are getting from the revenue, we are pumping back into the business to make more customers and to make products. Now we are at a transition stage again, realizing that whatever IPs we are making, or whatever product we are delivering to the customer, and that too at a very high valuation, at a very high value. So those IPs, we want to make ICs of our own. So we started making ICs. From the IP revenue, we transitioned to IC. So we made our own IC and manufactured it, and we have some customers also, but it is just in the initial stages. So now, and then COVID struck, and semiconductor being capital intensive and requiring lots of travel and marketing efforts, we are looking to raise some investments. We know that, there are so many customers out there, and we have some captive customers as well. In fact, one of our investors is one of our customers. So that's where we stand right now. And
how much revenue are you making?
Okay, so last year we made, because we were doing IP like I told. So last year we made around $2 million.
In IP revenue?
In IP revenue, yes. And there is no services because we stopped services, and the team which is delivering IP is also making IC.
And how much have you made from IC?
Yeah, so IC business is just starting out. We came out with an IC starting this year, for which we started sales, and we are expecting a PO of 350K this year. Mm-hmm. That is again subject to the condition if we deliver the IC and we have one more IP deal. But right now IP deals are not happening because that requires significant amount of travel. IP revenue is just one-time revenue. You made a product and the other support system is that, okay, once you sold the IP, you can charge the customer on the support that you provide for that IP. So that's the other revenue that we get. And because we realize that with IP, there is a limitation that you do a one-time transaction and the support charges are minimal. So we want to have some ARR, annual recurring revenue, and hence the IC model. So yeah, that's the current situation, but this is just the minimal revenue, which I told 350K is just the minimal revenue. We believe, and that is from one customer. We believe it can scale quickly.
So, Shubham, I understand your business pretty well. This is, I had customers like Cadence, KLA, Tencore, Tessera. Tessera is actually an IP company that went public as an IP company. So I understand all these business models very, very well.
Right.
I have no idea whether this is a fundable company or not because I don't know what IP, I don't know what IC, I don't know what the competitive landscape is. So I have to work with you to figure all that out. If you want to join the program, since you have a couple $1 million in revenue, it's not going to break the bank for you to join the premium program for $1,000 annual membership fee. We can start kicking it around and see where it goes. I don't know whether we can get it funded or not. I have to work on it.
Yeah, so I'll just tell you briefly about the market size because you mentioned. So,
but I can't.
Just a summary of it. Just a summary of it. You have already seen that all the mobile phones, especially the premium end phones from Google, Apple, and Xiaomi, Vivo, OnePlus, whatever phones which are coming out, they come with a Type-C port. And accordingly, there is a cable present along with it. And then there is a wall charger which goes inside the wall. So the USB-C ICs, they are present inside the phone, they are present inside the cable, and they are also present inside the charger. So that's the market segment. Similarly, the monitor will have a USB-C IC, the monitor which is at display in your background. In your background there is a TV, right? So that will also have a USB-C port. That's what we believe. And going forward, and our ICs, whatever product we are trying to make, all of them are trying to target this market. So that's the summary of it. And coming to the revenue side, like I said, whatever revenue we make, we pump it back into the business to make all these products. So yeah, that's the gist of it.
So I understand your business, but I don't know whether it's fundable or not because I haven't looked at the details of the business. I don't know the competitive landscape. I don't know what has been funded. I don't know what is the, patent situation on it. Are there going to be umpteen Chinese knockoffs? There are all kinds of things that go into determining whether a business is fundable or not. So I can't answer that question based on this right now.
Sure, Samana, no problem. Yeah. On the patent side, we have some 11 filed patents is what I remember as of.
Okay, that's good. That's good. To build any kind of, sustainable business in the sector that you're talking about, IP defensibility is going to be critical. Otherwise, you're going to get, you're going to get knocked off by the Chinese immediately.
That's correct. But our customers are in China. The IC customers, they are in China.
Yeah. Very good. All right. Well, if you decide that you want to work with me, you're welcome to join the program, and I will start working with you.
Sure, Salmana.
All right, folks. I think that concludes today's program. Unless anybody else has any questions, we're going to adjourn, and we'll see you back here next week. Thanks for coming today, folks. Stay safe. There's a lot of problems all over the world around coronavirus right now. There's a lot of escalation in the situation. So don't take undue risks. Stay safe. Keep your friends and family safe. Bye.